So the USDC stablecoin has just depagged and is dumping 4%.
Oh my God, is it over? Cryptocurrency is collapsing? What's gonna happen? So this week, everybody's talking about the collapse of the SVB bank and the repercussion of it of the stablecoin USDC. Well, USDC was known as one of the most stable coin exist out there because it was actually based on US dollar that was deposited in the bank supposedly. If you want to know exactly what happened, how did we got to this situation that the most stable coin that's supposed to be stable is not stable anymore? Stay tuned. What is a stable coin? So a stable coin is a cryptocurrency. If you want to buy Bitcoin, Ethereum, or any other alternative coins, altcoins, you have to convert your fiat currency, your US dollar, your euros, even your gold to cryptocurrency in order to exchange it into the liquidity pool. Stablecoin is a cryptocurrency that's supposed to stay stable, to keep its value $1 to $1, that no matter how many people are going to buy it or how many people are going to sell it, the value should stay $1. Maybe it's going to go up 1 cent up, 1 cent down, but it's supposed to stay $1 no matter what. Now, some of the stablecoin that exist in the market, like Tether or Terra Luna, USD, I forgot what's the name of it. Anyway, they were based on an algorithm. Basically, they were not based on real dollars they were backed up by. USDC was different. USDC had a real backed up dollar amount that existed in the bank. The problem is when that bank collapsed, the USDC was start to depagging, losing its value. But don't worry, the federal government came and rescued the day and saved the deposit. So USDC will be fine for now. But what exactly happened to cause the banks to collapse? It's called the fractional reserve system.
If you deposit $100 in your account, the bank can legally take $90 of it and loan it out without telling you. The bank must hold $10 of your deposit in reserve just in case you want some of it. These reserves are called vault cash. But why does your bank account still say you have $100 if the bank has stolen $90 of it? Because the bank left IOUs it created, called bank credit, in its place.
What is this? What is this? Where's all the money?
That's as good as money, sir. Those are IOUs. Go ahead and add it up. Every cent's accounted for. Look. See this? That's a car. $275,000. Might want to hang on to that one.
These are nothing but numbers that the banks type into their computers. So now there is $190 in existence. So the borrower takes the $90 that the bank loaned to him from your account and he pays the seller of the item. But then the seller deposits that currency into his account and his bank loans out 90% of that and leaves bank credit numbers in its place. So now there's $271 in existence. This process repeats and repeats until under a 10% reserve ratio, an initial deposit of just $100 can create up to $1,000 of bank credit, all backed by $100 of vault cash.
Now, you saw all that? Imagine that most people depositing way more than $100 every day. So what's going to happen when all these people are going to come to the bank and say, hey, I want my money back right now? All of that pyramid is going to collapse. The day that everybody's going to rush to the bank and say, we want our money back, the banker's going to say,
sorry, I ain't got no money, I'm not trying to be funny, but I left it all at home today.
Now you understand why if every bank is working on the same system, meaning the fractional reserve system, that's why a lot of these banks under a lot of vulnerabilities. Because if only the vault cash that they have in their actual safes are 10% of what people have, that's why the FDIC have to step in and either bail them in or bail them out. The difference between bail them in and bail them out is very simple. Bigger bank is coming and basically swallowing the smaller bank. This is bail in. Credit Suisse collapsed. So this government of Switzerland stepped in and forced UBC Bank to buy the smaller bank, Credit Suisse. So basically that's what usually happens. The merger or acquisition that's been forced on the system in order to save the bank. Bailout is an injection of cash into that system in order to recover it, and then they will save it. Now think about bail-in. The question that comes right after, and I heard the reporter from Wall Street Journal ask that question yesterday, is wouldn't it be even dangerous? Because eventually we didn't solve the problem. We just put a band-aid on a very deep cut. Because think about it, if the small bank collapsed because of the fractional reserve system, what preventing the big banks to collapse too? So, and that's a big issue. When these banks are too big to fail, because if they will fail, the whole economy will collapse underneath them. How do we solve that problem? The fractional reserve system has to be changed. And that's why Bitcoin was invented initially. But I think furthermore than Bitcoin needs to change the whole banking system to keep a little more than just 10% of the vault cash in the vault.
I love the fact that there are people in this country who want to get out there and take a risk. And they want to say, I could win big when I take those risks. That's great, but they should not go into banking. Banking should be boring. Banking is about making sure money's there. Every small business that wants to deposit money into a bank needs to know the money will be there when it comes time to make payroll or pay bills. That's what banking is about. The big risk takers, they need to go into one of a million other places in this economy, not banking.
Well said, Mrs. Warren. Usually I'm not tending to agree with the things that she said, this woman, but in this time I can agree with her. But the problem is, you know what? Who allowed that to happen? Who allowed this fractional reserve system to exist? You know who did? You and your friends. The politician approved that. Who's paying for your campaign? Did you ever ask that? Who's sponsoring all the big politicians, the campaign, Hillary Clinton? Did you ever ask that question? It's you and your friends. They're allowing big corporations to keep doing that. Because guess what? The banks paying to the politicians. They're working in collaboration. If you're not going to have the money for your campaign, you're not going to be running for office. So, yes, eventually, it's not fair, it's not cool. Banking should be boring. But you and your friend, the politician, allowed that to happen. I think bank is still a business. It needs to make money. But it needs to save at least 50% of the funds that their customer is giving them. Don't you agree?